Now,
on 105.9 FM and streaming worldwide on the WMAL app.
O'Connor and Company.
It's 7:37 on O'Connor and Company as we continue on this busy day. News out of the Middle East, news in a Manhattan courtroom, and news in your bank account and on your kitchen table as it is tax day. We're going to cover that trial against Donald Trump beginning today a little later at 8:05 with Tom Fitton of Judicial Watch, and we'll certainly give you the latest updates and news on the happenings in the Middle East and the current tense relationship there with America and Israel, sadly, with Iran flexing its muscle over the weekend. That's all coming up. But first, Julie Gunlock, it is tax day. Thanks to your husband, you have your taxes filed. Thanks to my accountant, I have my extension filed. But either way, this is uncomfortable, worse, in fact, than going to the dentist, having to do taxes every single year. Every time people campaign on simplifying this process and making it easier, that's all I care about at this point when it comes to tax policy. I would even take a higher tax rate if it meant not having to go through every freaking receipt that I've ever spent over the last year. Joining us right now is Ryan Ellis. He is an expert on the entire process, and he is also the, Ryan, the president of Center for a Free Economy and an IRS enrolled agent. Thank you for joining us, Ryan.
Great to be on.
So is this year even more complicated and even more sort of a headache than years past because of the new level of the audit regime that has been initiated with all of these new IRS agents?
Well, that hasn't really had time to filter through the system yet.
Okay.
And the Republican House did a great job of negotiating about half of that audit slush fund to be repealed, to be rescinded.
Oh,
so
good.
Congratulations to them on doing that. The bigger thing this year is, I don't know if your listeners noticed, but Congress was considering major tax legislation, and still is, all the way through the spring. And it's tax legislation that would have affected the 2023 filing. So that really was the biggest destabilizing effect this year in tax season, is that the tax law wasn't fixed. And it still hasn't been. As late as today, we still don't have a completely final 2023 tax law.
That's insane. And there's a lot of confusion over cash payments utilizing PayPal, Venmo, and those apps. What are people's responsibility there? Because some people tell you if you pay a 12-year-old to come and babysit your kids and you use PayPal or Venmo, you got to report that. Is that where we are now?
Well, back in 2021, the Biden stimulus package said if you get as little as $600 of things like you've just described, gig economy type, babysitting type activities, or even if you just split a vacation with your friends and one of you puts it on Venmo and all that, then you're going to get what's called a 1099-K form for as little as $600 of such activity. That's never gone into effect. Every year that it's been ready to go into effect, the IRS has said, no, we're going to give it another year. No, we're going to give it another year. Congress refuses to deal with it because Congress can't do much of anything these days. The IRS keeps delaying it, but it is absolutely one of the biggest tax simplification issues that we have. It's crying out for Congress to simply bring it back to the old level. The old level was $20,000. You had to go through $20,000 of such stuff before you got a tax form. We need to restore that, make sure it's back to the old level. There was nothing wrong with the old level, and the $600 is obviously never going to go into effect because the IRS keeps delaying it.
Okay, so an awful lot of people are listening this morning that did not file and are kind of panicking today. Tell us why it's really important to file an extension.
Well, I've got good news for those people. The biggest tax penalty in the tax code, I get this question all the time, is the failure to file penalty. If you don't file your taxes today, or if you don't file an extension today, and you end up owing, you're going to have to pay 5% penalty for every month that you wait, and that goes as high as 25%. So let's say you owe the IRS $10,000. You wait 5 months to file, you owe an extra $2,500. That's a huge, huge tax penalty, easily the biggest one in the tax code. And all you have to do to avoid this penalty is file a one-page form with the IRS, Form 4868, an extension of your tax return. Any tax preparer will be happy to do it. There's lots of ways to do it. Just talk to anybody that has a tax anywhere associated next to their name. Go to a storefront, do whatever you need to do. You will have the peace of mind at that point that once you get your taxes done, yeah, you might have interest. Yeah, you might have a little bit of penalty here and there. but you've avoided the biggest one just by filing that one-page extension today.
And if you could fix the tax problem in our country, I mean, seriously, I mean, imagine you were the emperor and you could just throw the whole thing out and start fresh. What would you do? How would you fix what we've got right now, or is it even fixable?
Well, the system right now is one that has gotten simpler over time. Over the years, what we've seen is that more and more people don't have a tax liability, or they have a much lower tax liability than they used to. Some complexity is avoidable. You mentioned that you would probably trade away a lot of the deductions that you could take if you could just have a simpler tax system. Well, you could always avail yourself of that today if you're a business owner. Just don't deduct your business expenses. And I don't think a lot of business owners would take that trade,
right?
But they're always happy to do so today. The good news is the Tax Cuts and Jobs Act, which passed under President Trump in 2017, it doubled the standard deduction. And it made it a lot easier for middle-class families to not have to go and fish through shoe boxes and go through all that sort of thing, to the point now where over 90% of American households take the standard deduction. They don't have to itemize their deductions anymore, and they have much lower tax rates, and they have a much lower tax bill. So I think we've made some pretty good progress on that front. The bad news is the Tax Cuts and Jobs Act is expiring at the end of 2026.
Yeah.
Or at the end of 2025, rather. 2026, the old regime comes back, and that's a lot more complex. The alternative minimum tax comes back, a smaller standard deduction comes back, a lot of the tricky phase-outs that we had to deal with before come back. So we need to make sure that the current tax policy we have at least doesn't get worse in the next couple of years.
All right. Well, it's never a good day here on tax day, but we appreciate you, Ryan Ellis, sort of giving us some direction on what we can do and what we can't do and what we need to get done. So thank you for joining us today. I know it's going to be a busy one.